Good morning, everybody. I hope that you all had a good weekend and that you're all looking forward to the week ahead. Over here in Asia, the Chinese New Year, or the Lunar New Year, is celebrations are coming to an end, so it's back to normal for a lot of us after a bit of time, bit of a quieter time. So markets continue to fall. Don't know why. Dow was down 1.4%, the Nasdaq down 0.6%, the FTSE down 2.4%. And we had the Nikkei down 14.5%, which is quite a shocking number. Ironically, after being the cause of all the problems earlier on this year, Shanghai actually had a positive week, and that was up 1%. The DAX was down 3.4%. I'm going to bring into this morning briefing also a couple of fund managers who I follow closely, Terry Smith and Neil Woodford. In my opinion, two of the best fund managers, certainly in the UK and quite possibly in the world, just to give you an indication of how there are guys out there that are capable of making the returns despite the difficult market conditions that exist, and also focusing on the fact that I believe that active investing is a better place to be rather than passive and ETFs and that type of thing. And in the last week, Terry Smith's fund was down 1.3%, Woodford's was down 1.1%. Again, obviously no one wants to lose money. When you compare that to the FTSE being down 2.4%, it is a good return. I appreciate that, of course, you do have dividends included in Woodford and Smith's funds, which aren't factored into the FTSE, which is a pure capital number. But at the same time, these returns are large enough to be better than. Sorry, there's a bigger difference to make them seem worthwhile, if that makes sense. The bundle of four that I always talk about, the Microsoft, Google, Apple and Facebook, again, it was down, obviously, given the market conditions, 0.4%. But unlike last week, where it was down more than the Nasdaq, once again, we're back to the status quo with the fact that it wasn't down as much as the Nasdaq was, the Nasdaq being down 0.6%. On the currencies, we've got a falling US dollar, which is probably good because it's been strong for too long, especially against the euro. And we've got the euro 113 now. It was 109 not so long ago, and then the dollar lost 0.6%. We've got a strengthening sterling against the US dollar, which is obviously good for all us Brits out there, especially if we're going on holiday to the States. Still 145, not the strongest, but gains of 1.6%. for the sterling against the dollar last week. Chinese yuan we saw up 0.6%, and the Japanese yen has fallen to 113. So that was quite a fall there. I mean, as far as the market goes, I mean, oil moved the biggest jump the oil markets had seen in 7 years at the weekend, and that was on the back of an announcement that OPEC production cut may manipulate the market. Those of you who know me know that I stay away from oil for those exact reasons, that I think that the oil market can be manipulated. And yes, while we did see some gains there, and it's nice for the day traders that are in and out, buying some at a lower price and making these sort of gains in one day, that's not my game. And I personally think you're going to see an oil price between $20 and $40 for the next 5 or 6 years. So that's how it's going to stay. Looking at, I always like to talk about a pensions and that type of thing. And it came out in the British press last week that the average person who is alive at 65, or average woman, lives for another 19 years. Another 21 years, and the average man lives for another 19 years. That's a long time. So, again, if you haven't got the correct savings plans in place, then it's important that you ensure you have that, so as not to, spend those later years worrying about money or worrying about where the next meal is coming from, or whatever it may be, and enjoying the quality of life that you deserve in your later years. The sporting fronts, we see the Premiership football continuing to be fantastically exciting. It looks like a battle of London clubs this year, whereas Manchester has been in the past. I'm not writing Leicester off, but you do wonder with what happened yesterday with Welbeck scoring that goal in the last minute, whether perhaps that is the start of a fall. I hope not, because I think they deserve to do well, and I think they'll make a Champions League place. But winning the title, I reckon you've perhaps got an Arsenal Spurs. They would be my two favourites. As far as a money quote goes, because I've just realised I've gone over my 5 minutes today, ironically it comes from John Paul Getty, who of course was an oil magnate, and one of his favourite comments was, buy when everyone is selling and hold until everyone else is buying. That's not a catchy slogan, it's the essence of successful investing. So there we go. It seems to be selling at the moment, it seems to be panic, it seems to be worry without foundation out there in the markets. So don't be scared, get involved. There's some bargains out there. As long as you look in the longer term, good companies, quality companies, dividends, you'll be absolutely fine. Anything you need, you know where to find me. Enjoy your week. Cheers, bye.